Hi everybody, it's Russell Markham here from VectorVest. How to build a brilliant watch list. I'm the Director of Education for VectorVest Asia Pacific, and today I'm going to do a wonderful presentation. I love doing this presentation. It's a hands-on approach where we're going to show you how to build a brilliant watch list for growth and income, both for the US and Australia market. It's good fun. Just you wait to see how easy it is to do. It's really easy to do, and I'm going to show you exactly how. So before I begin, please note there's our financial services license. You can find out more about us per our financial services guide on our webpage. All right. In addition, today I'm only licensed to give general advice. All right. So I don't have a personal financial planning license to provide personal advice, but I have a general license to provide general advice. All right. So please do speak to your financial professional for personal advice. Past performance does not guarantee future results. Forecasts and backtests used or discussed in this presentation are intended as a guide only, and actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. All right, with that said, let's get into it. So the first indicator, I'm going to show you a few key indicators today. The first indicator I want to show you is this indicator here called relative safety. It's an indicator of risk. Relative safety is computed from the analysis of consistency and predictability of a company's financial performance. It looks at things like debt to equity ratio, sales volume, business longevity, price volatility, and other factors. Why am I bringing this up? The reason I'm bringing this up is because in order to build a top growth portfolio, what we need to do is we need to go and find some of the best financial companies out there from a financial perspective, right? So top financial companies will deliver good growth, which helps you with your growth portfolio. So here what I've done as of the 2nd of May 22, what I've done here is I've come into VectorVest and I've sorted all the stocks by RS, relative safety. So it's on a scale from 0 to 2. The companies with the best financials have a high RS score. So anything above 1 is good. It's better than the average stock in the VectorVest database. But we don't just want good, we want exceptional. So hence we sort it in descending order. So if I grab the first handful here, and what I'm going to do here is I'm going to add this to a watch list. In this particular case here, we set this up already for this course here, build a brilliant watch list, or should I say webcast today. We do teach this in a course in a lot more detail, but for today, I'll put it in here, growth stocks, and push on OK. It's easy to do. You know, if you're new to VectorVest, you can take it a trial. It's really easy to set this all up. I've just sped it up just a slight bit here. So auto fit all columns. Here we go. So straight away I can see a sell rating. So we rate our stocks either buy, hold, or sell. Even though Pilbara has got very good financials at the moment, it's under some technical pressure because we're seeing it coming up as a sell rating. All right. So here we are. We've weeded out anything that is not either a buy or hold. So we removed the sell ratings and we've got that list. If I come and look at the bottom here, look at the watch list average, look at this. Dividend yield here. Now we're not after dividends, but this is very good for now. I'm not upset with that from a dividend perspective, but if I pull it back a tad here, this is what I'm after here. I'm after companies that are growing their earnings. So change the style, let's make it stand out just a tad more. Growing their earnings along with a very good relative safety score. So remember that definition on RS that we spoke about. Here we are, RS. Change the style, make it jump out just a tad more too for you to see. So companies that are improving their financial scores, and you can see here, they're improving it. Look at that, how it's picked up. It's broken above 1 on a scale of 0 to 2. So it goes above 1 here, 1.04, and it's really starting to grow itself going up. That bodes well for a good set of earnings. So our earnings per share, 12-month leading forecast on earnings, they are picking up, which in turn shows you what's taking place there on the portfolio. So let's do this. Let's jump back into the slide sets. And in here, let's bring up this one. So I showed you earnings per share. Earnings per share stands for our 12-month leading forecast on earnings per share. VectorVest determines this forecast from a combination of recent earnings, performance, and traditional fiscal and/or calendar year earnings forecasts. So if we come back into VectorVest here. There we go. So we've got our earnings picking up. We've got our safety, financial safety, RS picking up. This bodes really well. I want to bring in another two definitions. So I'm going to bring in this indicator here called CI. It's our comfort index. So it's looking at the consistency and reliability of that company's resilience, if you wish. But I'll give you the exact definition shortly. It's looking at companies that are testing higher highs and resisting severe and or lengthy declines in price. So you can see here, CI breaks above 1. And so that bodes well too for the performance of this going forward. So let's bring in the slide set here. All right, so here's our CI. I'll come back to VST. CI is an indicator which reflects a stock's ability to resist severe and or lengthy price declines. CI is based solely upon a stock's long-term price history. So coming back to VectorVest and bringing that back up again, there CI breaks above 1. So it's showing us that that group of stocks is very resilient. Earnings starting to pick up. You can definitely see it if I go back in time here. Look at that, earnings really starts to pick up. The financials improved. Look at that, breaking above 1 here, holding above 1. CI holding above 1. That stacks up really well. $20 odd all the way up to 29. Right, up over 40 odd % and climbing. So when you see that going back in time, this gives you a lot of confidence. And you can see right now at this point in time, your safety scores here, your RS, relative safety, they're picking up. Earnings continuing to power up. CI continuing to power up. If we put on our master indicator VST on a scale of 0 to 2, it's looking at both fundamental and technical analysis. And when VST breaks above 1, it's a good indication of both the fundamentals and the technicals picking up. So here, VST breaks above 1 at this point in time, 20th of May, 22nd of May 2020, price of $14.53, and it's now over $29. So you get a lot of early indications here. You can see, look, these stocks have bottomed out here due to the sell down due to COVID. VST breaks above 1, it gives us good confidence. We can start to see CI starting to track up, it's starting to pick up. We're still seeing the earnings declining, so we wait a little bit more if we're more conservative, even though fundamentals and technicals on average are picking up. So that just shows you how smart that VST score is. But by this time here, you're really starting to see things move around. You're starting to see earnings picking up. You start seeing CI really starting to ramp up. And at that point there, wow, it's all stacking up for you. VST is now well above 1 and holding above 1, so that gives you further confidence. CI is above 1, your earnings are ramping up, your financials are really picking up. So there is a great consideration for you to go in based on those stocks. Now, that's looking back in time. Looking at things right now, where do we see things? Well, CI is booming away, earnings booming away, relative safety booming away, our VST score well above 1 as well. Now, to simplify things, to make it really easy for you, just concentrate on this one here to begin with. All I want to do is I want to buy into companies that are growing their earnings for growth purposes. Here, the earnings start turning around. Portfolio value there, $21.77. It's now $29. If I was to zoom in right now at this point in time, where are we? Are the earnings growing? Yes, they are. There it is. That's how quick and easy it is to build your stocks for growth consideration. How easy was that to do? So if I jump out of here, all right, let's do it again. I'll show you just how quick and easy it was to do. If I remove this, all right, come back into Stock Viewer. All I did, sort the stocks by VST, grab a handful there, add them to the watch list. That's all I did, sort by RS, grab a handful of stocks, put them into the growth portfolio, and that's it. I removed the sell rating, whittled them down to a handful here, 10 in total, and double checked. Yep, earnings still going up. And then I did some additional checks. CI, yep, it's above 1, holding above 1, good. A master indicator VST being above 1 as well, fundamentals and technicals being checked, and our relative safety nicely above 1 too. There it is. It stacks up pretty well. All right, now from a dividend perspective, it's doing 3%. So that's not bad at all, and the franking credits are 74% and 85% for both the interim and the final. But this is purely for growth. Now you might look at this and say, well, could I get both growth and income? Now this does both growth and income, but what I'm going to do now is I want to concentrate purely on income, where we get the best returns possible from a dividend perspective, along with some capital growth. Let's do it. Same deal again. All right, so here you could come into stock viewer, and this time around, let's say you sort of buy at relative safety, you could come in here and you could start looking for a dividend yield. Find me those juicy dividends. Could take a while because we've got over 2,000 stocks to look for. Instead, what I'm going to do for this exercise, I'm going to use this tool here called Unisearch. And let's just create a new search. I'll show you how to build this right now. It's really easy to use. You just tell it what you're after. So tell Unisearch what you're after. So here I say stocks. Find it within the ASX 200. So I say watch list equals, in this case here, I'm going to put it into the ASX 200. And not ASX indices as such, so we've got that, but this is the one I'm after. ASX 200, there we go. So find it within the ASX 200. Find the dividend. Make sure that the dividend is at least 3% or better. All right. Make sure I'm getting full franking credits. So dividends, both the interim must equal 100%, and the final, all right, must equal 100%. There we go. How about that? And run the search. So straight away now I've got the best franking credits out there, 100% franked, at least 3% or better within the ASX 200. So what I'll do here is I'll grab a handful, right click, and I'll add to watch list. So let's bring this across and let's put this into build a brilliant watch list, income stocks. Here we go, push on OK. Here we are. It now loads it up. Go back to my watch list here, and here they are. I've grabbed 25 in total. All of them are either buy or hold. Let's have a look at the bottom line down here. Here we are. So nice set of earnings coming up. Great, that's what I want to see. But what's even more important, or at least equally important, and that is the yield. Wow, look at that, 6.81%. A phenomenal yield on offer there at the moment. I'll just make it jump out a tad more on the style. All right, so just shy of 7% yield currently. That's what I'm after now. Looking at this, I go, well, it's a little bit volatile. Went up very nicely there, came off. It's come back up. It's not too bad. I mean, this is typical of a good yielding portfolio. We're not after purely capital growth, but let's try tweak it up a bit more and try and minimize some of that volatility. Well, what I could do here is I could come into VectorVest and say, well, let's sort by, remember CI, our comfort index. So looking at those stocks that are resisting severe and or lengthy price declines, I could say, well, let's keep it, let's drop out the ones down the bottom with the lower CI scores. So I'll take it from 0.73 or lower. Let's take them out. This will smooth up the portfolio a bit more. We've got 10 in total. Let's come in here and have a look at the average now. All right, what have I done? Well, I've taken my yield from 7 down to just shy of 5, but that's still very attractive, plus the franking credits. And over here, look at that. So I've smoothed it out a bit more. Those earnings are brilliant, and this portfolio is really growing nicely at the moment. That's it. That's all I did. How easy was that to do? All right, so let's just show you how to do it again. So I'll take these out. All I did is I went to Unisearch. I built just a basic search. You don't need to be a computer programmer. You can just simply point and click. I said, find it within the ASX 200. Make sure it's at least 3% or better. If you take it a trial, if you're new to VectorVest, we'll do this all for you. You'll learn how to do it. It's really easy to do. Give me at least 100% franking credits. All right, so make sure it's fully franked for both the interim and the final. I run the search. And I just simply grab a handful of stocks and I add them to my portfolio. Now, in this case, you can put them in portfolio, but in this case, actually, it's the watch list. All right, so in here, add them to watch list, income stocks, push on OK, and that's it. Now we go back and we look at our watch list, and here are those stocks. All right, so income stocks, here they go. All right, what I'll do is I'll put in a bit more. So I'll just go back to UniSearch. There we are. We've got the top 25 being shown. Let's make sure I grab them. I don't think I grabbed them all. Right click, add to watch list, and that's it. Now you just push on OK, and they're in. Go back to my viewers, and here they are, all 25 are there. View the watch list average graph. So you might want to keep all 25. That's great. The 6% dividend yield. The earnings are stacking up really well. That's not a bad portfolio from an income perspective. All I did is, the final thing I did is I said, well, let's smooth it out a tad more. And I took out anything where the CI was below a certain threshold. So let's say in this case here, we'll take it from 0.73 again, and I'll take those out. All right, we get it down to a total of 12 now in this example, and that's it. That was the final check and balance. So, how does that stack up? Those earnings, remember, we're looking right now at this point in time. I really like the way it's holding. It sort of consolidates, up it goes again. The earnings are top notch, and the yield there in this example here at 4.5% plus, you get your full franking credits, both interim and final, and you can see over the last 1 year and 5 months, they've been fully franked all the way through, which bodes well for the future. There you go. How do you like the look of that? That wasn't hard to do, right? There are those stocks, and you can then come in and look at the individual components on those dividends as well. All right, so you can see the individual components on the yields. Very, very easy and fun to do. There you go. So we've built both income and growth for Australia. Let's do the same thing now for America. All right, same deal. So I'm going to set up a growth and income portfolio. Let's go and populate the growth portfolio. Remember how we did it? Yep, you got it. So go to stock viewer. We sort by relative safety in this case. And what I'm going to do is I'm just going to simply grab the stocks that are not sell rated. So just the first handful here that are not sell rated. All right, so these companies have got excellent financials, but the ones with the sell rating at the moment are telling us they're under a bit of technical pressure. So I'm now going to select those ones there, add to watch list, and we'll put it in under build a brilliant watch list under the growth portfolio, and push on OK. There we go. So those now populate in. Same as what we did for Australia, exact same methodology. Now we're dealing with US stocks, exact same methodology. Come and have a look down at the bottom. How does this one stack up? So from a dividend perspective, you'd be disappointed, but this is not a dividend portfolio. This is a growth portfolio. And pull it back just a tad over here. Let's see, over the last 9 years, wow, look at that. Those earnings just continue to power on. These are brilliant earning companies. So there's your earnings. If I come in and look at the CI score, Comfort Index, it broke above 1 approximately there. You can see just broke above 1. Price of 218, it's now 325, the average price for all those shares in the portfolio. So your CI score stacking up really well. Remember, we also looked at our master indicator being VST. So if I bring in VST here, looks at both the fundamentals and technicals. You can see here, I'm really struggling to find a time where it was below 1. There it went below 1 and went above 1. Just went above 1. Look at that, $35. Look at today, $3.25. VST is an incredibly powerful indicator. The reason I sort by relative safety to begin with is because I'm looking right now in terms of some of the best financial companies right now to pick on. I'll just recalibrate that. It's a bit neater. There we are. There we go. How easy is that to do? You know, CI is trending above 1. All right, it's still holding above 1. Don't be fooled by the pullback. That's okay, as long as it's still above 1. Holding above 1 not very nicely. The earnings continue to power on. This is a brilliant set of stocks. Just a little bit of extra that I'll show you. What do you think that those companies are doing on their sales? Companies that are growing their earnings, typically, yep, you got it. They should be growing their sales on average too. Now, for the accountants in attendance today, you might be saying, well, it's all very well making more sales, but if they're not profitable sales, you're not making money. Well, that's where our friend net profit margin comes in. For every $1 of sales, what are you keeping in profit? So you're making about 6.3 cents for every $1 of sales. So if you're growing your sales and your net profit margin is continuing to produce a positive number, then that bodes well for what you're going to make in terms of money, hence the earnings. All right, so net profit margin holding up, sales growing, earnings going gangbusters, CI holding above 1. I think it's a pretty potent set of stocks right there. All right, so if I close out of here, there they are, 10 big companies there in the US, and they're certainly not penny stocks. Look at the price of some of these companies per share. You're certainly not going to have any liquidity issues there. All right, let's do the same exercise again, but this time around, let's do it for income stocks. Remember how we did it? So we jump straight into our Unisearch tool. Now we're doing it in the US. All right, so Unisearch in this example here, all I'm going to do is I'm just going to say stocks, watch list equals S&P 500, where the dividend yield is 3% or better. Quick and easy to do. You just simply do like this, stocks, filter by, watch list, operator equals to, the team at support will help you set this up in seconds, and I just said S&P 500. That's all I did to create that top line. And then to create the second line, I just simply said stocks, dividend analysis, dividend yield, greater than or equal to, and I put in 3%, and that was it. So I create those two lines, take you 20, 30 seconds, and you run the search. Now what you can do is you can grab all these companies, just make sure there's no sell. I'll grab a handful there, and I'll add this to my watch list. And in this case here, it's coming into income stocks, and I'll push on OK. I now go back to my given viewers, go back to my given income stocks, and let's look at the bottom line here. So view watch list average, great set of earnings. Look at those earnings really coming up in recent months here, and what we want to really see here is the dividends. Dividend yield, nice, 3.93%. It says you can't get good dividends in the US. It's just chances are you haven't been shown how to find this. All right, so there we are. Dividend yield of at least 3%. These companies are growing their earnings. Let's look at the CI score. CI score is well above 1. It's holding above 1. And over here, it breaks above 1 there, around about there. And earnings continue to power on. This is a great portfolio from a earnings perspective and also from a growth perspective, because if you think about it, if you are buying into companies that are growing their earnings year in and year out, what do you think that's going to do on average to the dividends? Yep, you got it right. It's going to maintain those dividends. So what I can do is I can put on the actual dividends in dollars and cents. So here, if I put in actual dividends, what do you think will happen here for companies that continue to grow their dividends? What do you think that will do to the earnings on average, and vice versa? Companies that are growing their dividends will typically only grow them if and where earnings continue to grow, because you're not going to keep paying out if you're not making money. So this really is the key driver, earnings behind growth and income. You've got to make sure you pick on the portfolios that are growing their earnings, because with a growing set of earnings, you're going to expect a growing set of dividends where the companies are dividend payers. There are plenty of companies out there that are growing their earnings, but they're not dividend payers. They don't want to pay out dividends. So what we're doing here, by screening Unisearch, by screening it to make sure that we are finding the dividend payers in the S&P 500, and by doing that, we're able to pick on the ones that are paying the dividends, and because the earnings are growing, the dividends on average are increasing, and hence this is what we've got on the net effect over here. So I'll just I'll change up the style here. Let's make it jump out a tad more in a different color. All right, so here we go. You can see a correlation, earnings, dividends, and if I pull it back a little bit further, and in time. What was interesting here is these companies' earnings were falling, but the dividends remained steady. So these companies had obviously had confidence that the earnings were going to turn around. Where they don't have confidence, where the earnings are going to turn around, you'll start to see them chopping those dividends. So this also gives you a very good indication as to where the likelihood of those earnings are going to continue to play out. So very nice set of earnings and dividends on average across these given stocks. All right, so it bodes really well for the future as well. So there you go. How easy was that to do? Quick and easy and fun to do. Here they all are. So there's 20 in total, for example, if you wanted to spread it across 20 stocks. Now, if you don't want to spread it across 20 stocks, let's pick on CI again, for example, and we could say pick the top 10. So 3, 4, 5, 6, 7, 8, 9, around about there. Is that the top 10? And I could chop out these ones here. All right. Oops, I've chopped out one too many, but it doesn't matter. But let's say top 9 or 10. So you whittle it down a bit, and you can view the watch list average. So this is with a smaller sum, but you've got a very good select stocks to choose from. So you can whittle it down. You might say, well, I've only got money for 9 or 10 stocks that I want to spread it across. There you go. This is something that really stacks up rising earnings and those rising dividends. Quick, fun, easy to do. How hard was that to do? So let's just summarize what we've done. We found a set of stocks, 9 stocks here for income in the US. We found 10 stocks for growth in the US. All right, so some big household type names there. Coming back to Australia, we found 25 income stocks, and we found, in this case here, 10 growth stocks. And it took us less than half an hour with me demonstrating it per this short presentation here today. That's the power of VectorVest. It makes it so easy for you to do. So what I'm going to do here is I'm just going to revert my slide set back on here and just leave you with that. So remember, we looked at VST. It's our master indicator. So if you want to go and find stocks with the best combinations of fundamentals and technicals, VST is certainly something that you want to consider. Because what I can do here, if I move myself out of the way and I come back to Stock Viewer, this will give you both fundamental and technical analysis. So today we picked on RS, relative safety, finding those top financial companies, but you've also got this indicator here being VST. So it's another way you can sort them as well. So for example, Grange Resources got a very good RS score and a very good VST score. There's no surprises there to see that you're going to get a good combination of both income and growth on average. So here you can see dividend yield of 8.76, phenomenal. Those earnings at the moment are powering up. They are coming off just slightly, but in recent times they've been going gangbusters along with the share price. And so that's one of our top VST stocks right now. Let's go to the US and do the same thing here. So for Stock Viewer, we can also sort it by VST. Just another way of doing it. And let's pick on our top one here, SJT ticker code here. And let's load that up. No surprises there. Nice earnings, great dividends on offer here. The dividend yield there, whoa, look at that, not 8.3 on this one here. Good combination of both fundamental and technical analysis. All right, so if you like what you see today, the last thing I'll leave you with here, and that is, why not consider taking out a trial to VectorVest? So if you want to do this exercise that I did today, do it for Australia and do it for the US. We give you access to both those markets. We give you Europe, UK, and Canada as well. But if you go to vectorvest.com today, you can click out on here to take out a risk-free trial. If you take out a trial, do the exercise that I've shown you today. Go back, rewatch this recording. It'll be a recording now. Rewatch it, watch it again, and do exactly what I did. Can you improve the performance? Can you make it better? I'm certain you can. Absolutely you can. I did it very quickly here on the fly presenting. The key that I wanted to get across today to show you is just how quick and easy it is to do. It didn't take me long at all. All right, so let's leave it here. I'll wrap it up. What I'm going to do is I'll leave you with the list that we created today. So we created a watch list here for both growth and income, and I'll leave it there on the income. A few of you, no doubt, would want to see that final list that we put together there for the income, just how quick and easy it was to do. All right, so I'll wrap it up there. Hope you got a lot out of it. And don't forget, this time next week, we've got another Hot Topics of Interest presentation. Look forward to seeing you then. Bye for now.